It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching the China Show. I'm Annabelle Droulers with Stephen Engle.
Hi, good morning, Annabelle. Here, counting down the open of the markets in Greater China. Our top stories this Friday morning: caution in the markets ahead of next week's Fed decision and delayed U.S. inflation numbers. Today's Yuan fix also in focus on signs Beijing is not quite ready to let the currency fly high.
China's AI push accelerating with chip developer More Threads to debut this hour in Shanghai. Meanwhile, Cambricon plans to more than triple its production of semiconductors to fill the NVIDIA void.
And the French President Emmanuel Macron urges China to invest more in Europe as he and Xi Jinping visit the city of Chengdu.
Well, welcome to Friday morning action today, and you're seeing stocks here actually looking to end the week on a bit of a sour note. So you did actually have a pretty lackluster session in Wall Street overnight, and that is certainly translating into the morning session. The clear laggard is Japan, but put it in context, because yesterday you saw those tech-heavy benchmarks, the Kospi, the Taiwan, under pressure. They're sort of trading fairly steady today, but the Nikkei is off 1.4%. In the US, it's very much that focus coming down to inflation data, because the Fed is going to be getting a reading on their preferred inflation gauge later Friday. So a bit of wait and see until we see that data coming through. We'll also get the backdated figures for September as well for income, the spending report. And that, of course, was delayed due to the government shutdown. The dollar, you can see there, again, fairly steady so far in the session. But let's take a look at the Golden Dragon Index overnight, because lots of attention on Chinese equities, and we're going to get through it in this hour. As we just said, that we've got that debut of More Threads in the session today. More Threads, it's a chip designer. It's one of the up-and-coming names in China, very, very key to the broader semiconductor ecosystem. The chairman of that company was actually with NVIDIA until 2020, and then he formed the business. So again, a really important one for us to track. Golden Dragon Index overnight, little change in the session. But let's also take a look at equity futures ahead of the open, as we said, in just under 30 minutes from now. Looking fairly muted so far. Again, that focus, we're still going to be coming back down to the Yuan.
The Yuan, absolutely. So we got that clear signal yesterday when we were right here on the China Show with that daily fix, kind of authorities slowing down the pace that we were seeing the Yuan gain as the dollar weakness was pervasive, but also signs in the Chinese economy were pointing towards a stronger Yuan, and it was pointing towards that 7 handle to the dollar, but they put the brakes on it. The people that we've spoken to, Annabelle, are essentially saying the PBOC maybe wants a slower approach before they know for sure what the Fed is going to do next week as well with their possible dovish stance. Yeah, and I think Bloomberg Economics has a really great view on this, and we do have Changshu coming up in about 10 minutes from now. But just talking about, this is a playbook we've seen before. You know, we can't really be too surprised in the action and that pushback we're seeing from the PBOC. Yeah, it doesn't mean that they're against appreciation of the Yuan, and that's something we will unpack with Changshu and others today. But again, it's the pace of the appreciation. Yeah, and as we said, the other big theme that we're watching in the session today is More Threads, and I'm just so personally excited about this one. I really, really am. So it's an AI circuit board maker. Yeah, right? We can think about this as a company that makes GPUs essentially. Yeah. So it's following the NVIDIA model. So you do actually have 2 chip makers in focus, or chip developers today. There's Cambricon, which develops what's called an ASIC chip. So that's chips that have specialized functionality, and that can include for AI. And then you have a GPU, which is that more general use one, parallel functionality, and that is the NVIDIA approach. So that is also a company that is going to be following or looking to follow in those footsteps with the money that it's raised, essentially. So Cambricon is not necessarily just filling the void left by essentially the exit of NVIDIA. It's also taking on the overall leader, Huawei, in China. Yeah, exactly, because you've got, I guess, those competition amongst the chip developers, and these are some of the different bigger names in the market, but of course they still need to work with their foundries like SMIC, for instance, that continues to really be stuck at 7-nanometer technology. But let's also take a look at the agenda for today, because yes, okay, More Threads is one of the items, but there are other things we're focusing in on, and that includes, of course, with the Yuan we've talked about. We've got a government debt sale coming through. The food delivery sector is another focus as well. That's right, because we got word from the regulators, the State Administration for Market Regulation yesterday, that they're going to sort of tighten oversight of the food delivery platforms. There's been a vicious price war there in that sector, trying to drive out some of the smaller competition. But again, there's going to be more oversight from the regulators. So that's why we're going to watch companies like Meituan today.
All right, let's get to more threads now with our China correspondent, Min Lo, who joins us. So, Min, what can you tell us about this company? Because again, I really am very excited about it.
Yes, I can tell, Belle. But yes, this is a company, it's quite interesting because it started by an ex-NVIDIA employee in 2020, and it again started out selling GPUs, chips for computer graphics, visual rendering, and then eventually it pivoted away to AI accelerators for large language models. So that sounds very familiar to the, similar to the NVIDIA model. And interest has been staggering in China. The retail portion of this IPO, over 2,700 times oversubscribed. Mind you, though, this is a company that is still unprofitable at this point. It is still making losses as of last year, 1.5 billion yuan in losses, 430 million in revenue. But this year we saw that number improve tremendously, and it really fits into that domestic substitution theme.
And it has tentacles that spread out. So there are a number of other industry players that are tied to this company. We saw that in the stock market yesterday. The stock reaction to Shenzhen H&T Intelligent Control, Hangzhou CNCRIT, Luanmei Quantum. So again, that's why we're looking at this not just as an individual company, but also because of the tentacles.
Yeah, you got to see it in conjunction with all the developments in the AI space in China, because it's not just the more threats that is sort of looking at an IPO now. This IPO could potentially pave the way for other IPOs, including the likes of Changxi Memory Technology, Yangtze Memory Technologies. They are all mulling IPOs in Shanghai as well. You got to look at it in the context of how Cambricon is looking to triple its output next year. Huawei looking to double its output of chips next year. But still, there is some gap for this company to catch up on, because when you look at NVIDIA, you look at the current capabilities, even for Cambricon, it's relying on SMIC's technology that is stuck at the 7 nanometer stage, which is several generations away, because currently what TSMC can do is 2 nanometers or below. So still some way to go.
All right, Min, great to have you with us, and we'll of course be tracking the debut or trading debut of more threads at the bottom of the hour. But let's bring in James Wang now. He's head of China strategy at UBS Global Research. And James, I know you can't comment on more threads specifically, but just talk to us about what you're seeing across the broader semi-ecosystem in China and the investability of it as well.
Yeah, so we very much like the tech names in China, the semiconductor equipment names. And I was fortunate actually to visit some of these companies, the manufacturers in particular, and you can see the localization that you guys were mentioning. That's really happening, and some of the fab that they're talking about. So every part of their supply chain, the manufacturing process, there's now a credible Chinese counterpart in the process, and they're talking about moving the localization, the manufacturing process, to something like 50%. So it is happening at a very quick pace.
Yeah.
And the semi-experts we've met previously will compare some of the NVIDIA H20 chips to, for example, the domestically produced chips, and the difference is quite small. And that is why you've seen, for example, the government saying, actually, we don't need the H20 chips.
Well, that's it. And we've been discussing this all week, this exact question. Even if you could get H200 chips to China, would China actually want them, just given that big focus on building up the local ecosystem? So you mentioned some of the foundry players, that's Huahong, that's SMIC as well. What do you think then about the outlook for any sort of bigger breakthroughs and the amount of investment that you see? Because it is a very difficult sector to get a reading on, even from an analyst perspective, just given you've got a lot of it that sort of happens behind closed doors.
Yes. So for us, if I look at the profitability of the hardware tech companies, the semiconductor equipment companies, they've been accelerating. And that's because there's actually real demand for their products now, i.e. the AI servers, the domestic substitution, and their products' quality is also improving. So to me, I think the investment phase will continue. And you look at memory prices also going up, so it's also encouraging more spending on the equipment supply chain.
This wave is also sort of encouraging optimism of domestic innovation and the to eventually lift the Chinese economy. But the task at hand right now is anti-involution and trying to stop the price war and get consumers spending and stop that horrible deflationary cycle. So going into this Central Economic Work Conference where they're going to be setting the priorities, what should be the priorities now? Yes, AI advancements and combating what NVIDIA's leads in the AI chips and accelerators is a long-term goal, which they're gaining traction. Yeah. But what are the targets they need to hit right now?
So I can talk about what the investors want to see.
Yes.
But obviously, we don't know what the government's going to target, but we've got hints of it. So again, technological independence, boost consumption, but definitely I think investors want to see more measures being implemented on consumption. It's very clear that the consumption next year is going to face a tougher comp, right? Subsidy effects are going to wear off. We've already seen a bit of that. And also, generally, the wealth effect associated with the property market, it's also still negative. We've seen property prices continue to decline. And so I guess consumption is really what investors want to see. And on top of it, definitely the anti-involution, Steve, that you mentioned, protecting business profitability.
What's the catalyst that the investors are looking for, though?
So exactly those. I think anti-involution, exactly how they're going to implement it, and also there's been talk. So we've got hints of it. The government targeting consumption as a percentage of GDP. Now we haven't got an idea exactly what target that would be.
Right now it's about 40%.
40%, correct.
I've heard calls that it should be about 50%, and there should be a stated goal. Would that help?
If there's a stated goal, we know if the government has a goal, usually they'll strive to achieve it, and usually they get there.
That's the point. That's the point. If they make a stated goal, they'll hit it.
We don't know yet. So let's hope we see some kind of it. Maybe we don't see it at the Central Economic Work Conference, but two sessions meeting is another milestone or another time frame. We can look into that. Yeah.
Anti-involution is pretty hard to crack down on specifically in the services sector. And what do you think's happening with the big tech names? I'm thinking, of course, JD, Meituan, Alibaba.
It's definitely tough. They all have their competitive goals. But one hint or one comfort we got was that Alibaba is talking about lower losses in its instant shopping and food delivery business heading to the next couple of quarters. So it seems like we've hit the peak. But how quickly can we see that recovery in profitability? That's still difficult to see. But we have seen in other sectors, for example, in express delivery, in airline prices, we've seen a bit of recovery because of this anti-involution drive. So we have seen on the ground, even in services sectors, where there are quite a bit of private players, if their profitability is really struggling, there is an incentive to boost pricing.
If these fruits, come to fruition, if you will, by the end of the next year, what do the China markets look like?
So for us, so we expect, so MSCI China target is 100. So we've got an EPS forecast of about 10% into next year, with top line growth of about 5%. And margin improvement to us is quite critical. So anti-involution will be one of those that drives margin improvement, and also lower depreciation. So we're actually seeing CapEx for listed companies having come down. So that would potentially give us another 4%, and with a 1% buyback yield, that's about a 10% EPS growth. And we also expect a little bit more of a valuation uplift as earnings growth accelerates. So giving us something like a teens kind of upside for the target for next year.
I do still need to mention some lines that have crossed the terminal, because we actually had the China market regulator issuing guidelines to tighten oversight of food delivery platforms and again try and curb that price competition we're seeing. We've had a response to that just in the last few moments from JD. They're saying that they're going to be complying with the new government standards around food delivery. Meituan as well, saying that they're going to be adopting new standards for food delivery platforms. So, I mean, this is all about, again, trying to curb that price competition and protect workers' rights as well.
Protect workers' rights, that's a big one as well for the government. So that'll be an interesting sector because, again, the price war has eroded profitability tremendously, hasn't it? Yeah. So, again, there are other industries as well that you need to look at that need to stop the race to the bottom, if you will, EVs and the like. Are there specific sectors you see that you like because they might benefit from the government's intervention? So far what we have seen is the government slowing down the capacity expansions for companies. And we have seen, for example, manufacturing capex in the most recent quarter nationally has slowed down. But listed companies, they've already slowed down from last year. And
The sectors that we really like is actually solar. So solar sector.
But there's overcapacity there.
For sure. To us, it's actually the problem child. Because if I compare the various sectors, their net profit margin, right, that's going through anti-involution, solar is the one that makes the least profit. We're talking about 0% net profit margin versus historical average of 10%. And if you look at in 2015-16, why the government went through this supply-side reform for sectors like steel and coal, it's because these sectors were not making money. So for me, I think solar does make sense. And our share prices have gone up, but we're talking about an upside from 0% profit margin to normalized historical average of 10%. So we're still talking about huge potential upside in terms of profit margin. So for us, solar is really the way to play for this anti-involution drive. Yeah.
Can I just get your views as well? Last question around AI specifically. We have seen, for instance, you've got the big names and the names we sort of know. You can buy Alibaba or Baidu. I mean, they've both got their semi-efforts. You've got those listed names like Huahong or SMIC. Do you prefer that kind of approach, or do you look more for the sort of some smaller suppliers in the industry, for instance, optical transceivers, that they've got a lot of attention this year?
Yeah, so we've got actually a couple of tracks to follow. I think we buy them all, if you like. We like the platform companies, particularly the biggest AI companies in China, right? They're the ones that are most likely to monetize off AI because of the strength of their platform. We still like very much the localization theme, i.e. the semiconductor names. I think that will happen irrespective of what happens to global AI. On top of it, we still very much like the US AI names. So we think CapEx will continue to increase. So those that are geared towards the global AI play, we still like. So i.e. the optical transceiver names, the PCB names.
All right, James, thanks so much for joining us this morning. Head of China Strategy at UBS Global Research. Thanks so much. All right, I think we're going to check the Yuan fix right now. Do we have that up on our screen? Because there it is, 7.0749. Again, yesterday, as we were sitting here, Belle, we were talking about the efforts by the authorities to essentially slow down the rapid appreciation that we are seeing. So a weaker rate, slightly weaker than the consensus estimate of 7.0740, a little bit weaker at the reference rate this morning at 7.0749.
Yeah, an interesting one. We'll get more context on that just in the next few minutes. We're going to be counting down, of course, the open of trade in Shanghai, Shenzhen, Hong Kong. This is the China Show.
All right, welcome back to the China Show. You're watching Bloomberg, of course. We're looking at the Yuan fix in the last few minutes. The survey was 7.0740. The actual reference rate that came in just a couple of minutes ago at slightly weaker than that, but it's not perhaps as strong a signal as we got yesterday when it was a clear indication that authorities wanted to pump the brakes a little bit on the pace of appreciation. Did the market essentially get the signals yesterday? So essentially the fix is not as strong a signal from the PBOC and from authorities as it was yesterday. It doesn't necessarily, as I've been saying, mean that the authorities are against the appreciation of the yuan. It's just the pace of that appreciation. For more, let's bring in Bloomberg Chief Asia Economist Chang Xu joining us now. So again, what's your take on this? The market got the message?
I think the market got the message. It's not a surprise that the PBOC came out quite strongly yesterday to push back this, in a way, sort of by China terms, rapid appreciation. The market has been building up the appreciation momentum. We have our own RMB stress tracker, and that's indicating prior to the PBOC pushback, the appreciation pressures reached the strongest in 4 years. We know that the PBOC tends to come out when there are one-way movements or one-way expectations. So they tend to be more relaxed when macro and market conditions are aligned. That's say no massive shocks to the economy, and there are no massive movement in one direction. So going forward, we do see the PBOC come into the market, continue to guide the market to more sort of two-way movements, and potentially sort of with a gradual appreciation trend, if that's supported by the macro and the market.
Yeah, so they will allow for more flexibility. It's just that the market conditions need to be there for that to happen. What do you think then about the trajectory over the coming couple of weeks? You've got the Fed decision, you're coming into the Politburo meeting, you've got the Central Economic Work Conference. What's the outlook then?
Yeah, if we talk about the near-term outlook, I think there will continue to be some appreciation pressures for the RMB. There's macro narrative, which I have some sympathy on, although I do see the market did sort of run ahead of itself a bit. So there are some sort of there's a macro narrative pushing the RMB stronger. At the same time, at the year end, there are seasonal factors. Exporters bring back the dollar funds and convert to RMB. So that's also adding up pressure. So we do see some pressures going forwards, and the U.S. The Fed is already. The market is slated in a currency, an interest rate cut that could potentially sort of add to the pressures.
Yeah, but that seasonality factor is one as well. Yeah. All right, Chung, thanks very much for joining us. That was our Bloomberg Economics Chief Asia Economist, Chung Shu there. And we're counting down to the open of trade in mainland markets, also Hong Kong, taking a look at how we're seeing those faring across the board. And we are setting up for, well, we've got futures already, or already pre-market trading rather, but you're seeing the Hang Seng down by 0.4%. Big focus on the tech space today, given we do have that More Threads debut coming up in about 7 minutes from now. So more ahead. This is Bloomberg. Taking a look at the Hong Kong pre-market session today, you actually are seeing stocks looking like we're going to see a bit of a drop at the open, but let's take a quick check on some of those movers as well, because you've got those food delivery platforms in focus. Alibaba, JD, Meituan. China has come out saying they're going to be looking to tighten their oversight of food delivery platforms. JD and Meituan have already responded to this, saying that they will comply with the rules. Let's also take a look at some of the chip makers or debuts today. You've got Tianyu Semi, which is going to be under pressure. You can see making its trading debut today, but it is a wafer production manufacturer. Also got More Threads, a big one to note, because that is a mainland listing. It is one of the biggest, or the second biggest we've seen for mainland exchanges so far this year. Heavily oversubscribed, that retail proportion. And actually, when you take a look at Shanghai pre-market session, it does indicate perhaps we're going to see quite a strong jump at the open. More ahead. This is the China Show.
And welcome back. You are, of course, watching the China Show here on Bloomberg. We're counting down to the open of the markets coming up in about 40 seconds. Of course, we're watching a debutante, Annabelle, up in Shanghai, a couple of debutantes here in Hong Kong. Busy Friday morning.
It's a busy Friday morning, and I just can't say how excited I am about this trading debut today. But More Threads, I mean, it was heavily oversubscribed on the retail portion. I think we were saying more than 2,700 times. So it just points to that huge amount of interest. I think actually one of the most the oversubscribed share listings we've seen going back to 2022. It is the second biggest IPO as well for onshore markets this year. So it's raised more than $1 billion. This is a company that very much sees itself as wanting to follow in the footsteps of Nvidia. But let's take a look at how markets are faring as we come online today, because you've got the Shanghai Composite so far trading fairly steady. But again, coming back to More Threads, let's change that strap there. Make sure you uncheck closes rate or checkers rate, but essentially we are seeing a very, very strong surge at the open here because shares had been priced significantly below that threshold, and we are seeing, again, a lot of optimism into it so far today. So you're seeing, again, a jump there of about 500% at the start of trade. So this is a company that was founded by a man who worked for NVIDIA from 2006 until 2020. This is Zhang Zhongming, and he essentially has started this business, aims, as we said, to make GPUs. He wants to be globally competitive in this business as well. So it is a very interesting one to see, especially because you've got a lot of optimism around any breakthroughs we see in China's semiconductor industry in general. But that's the story there. Let's take a look at what's happening in the Hong Kong session, because pre-markets have been indicating we were going to see stocks a bit under pressure today. And again, you are seeing that with tech outpacing those broader losses that you've got at the likes of Alibaba, Baidu, Meituan, all in the red. In terms of Alibaba, Meituan, of course, it's that focus on the food delivery platforms. We had the regulators coming out saying that they wanted to have further scrutiny of this. We've already heard from JD and Meituan saying they're going to be complying with these new standards. But again, it is sort of a down arrow story today. Pretty much every sector in the red so far. But as we said, that big focus is on more threads and really that huge surge that you're seeing at the open here. As it is a chip developer. It's one of the better known startups in China. And as I said, founded by Zhang Jianzhong, who worked at NVIDIA.
Yeah, AI circuit maker. And again, it really fits into the theme of the news flow we've seen this week with CamberCon talking about adding on to doubling, I believe, their output of AI accelerators to take on not only NVIDIA's void that in the China market, but also the market leader Huawei. And then Tianyu is the semiconductor company that is also having a listing debutante in Hong Kong, 60 times oversubscribed. But let's get more on the much anticipated debut of more threads. Asia equities reporter Sang-Mi Cha joins us now. So the market seems to be just as excited as Annabelle is for this listing.
Yeah.
So why should investors be really looking at this right now?
Yeah, it started with a bang. We're seeing over 400% rise at open. Of course, some IPOs, we have seen this kind of moves, but in onshore, it's quite significant. And it's the second largest IPO that we're seeing onshore. And also for those that are bigger than 1 billion, it goes back to 2022 and the biggest popularity there right now. Of course, the interest right now is because we've seen, there's so many of these NVIDIA wannabes in China. With CamberCon, for instance, the shares have doubled this year. And it really feeds in that whole self-sufficiency theme that we have seen in China because NVIDIA chips are just not allowed onshore. And so even overnight, the senators, U.S. said that they want to bar AI advanced AI chips into China.
That's right? That new regulation, the new bill that was proposed, bipartisan bill called SAFE, the acronym, right?
Precisely so, yes.
So how much weight is that going to have, though, to weigh down Jensen Huang's ambitions? Because he was called to Washington. He's met with lawmakers, and he's been tight-lipped.
Exactly, but he did say that he's not sure, even if U.S. were to relax some of these restrictions, whether China will really take that H200, right? Because Beijing has been pushing for the self-sufficiency. They have been discouraging local companies to not use NVIDIA chips. So it really begs the question, is China going to take it? Of course, the companies want to, and of course, we have more threads now, which makes the GPUs, they have similar patterns that they're showing just because the founder is an ex-NVIDIA employee. He started off with the graphic units for gaming and video rendering. Now they're looking at AI accelerator.
Yeah, I think that's sort of one of the points of difference between More Threads and CamberCon is that More Threads is working on developing fully functional GPUs, whereas CamberCon is focused on these so-called ASIC chips that have more specific functionality, and that includes for particular AI tasks. But talk to us then about the broader ecosystem in China and across Asia. I mean, because we know, of course, the main names, and that's TSMC, SK Hynix, Samsung, of course. But what about the move to look for the smaller players as well?
That's correct. You know, as the saying goes, when there's a gold rush, sell shovels. But then what's happening now is investors are looking for the suppliers that make these shovels, right? So we're seeing a lot of that broadening out into smaller and mid caps. We see some companies like MediaTek, which is a Taiwanese company that makes TPUs, one of the ASICs, right? And Zhongji Innolight, which is an optical transceiver maker in China that has jumped so much because it actually gets revenue from Amazon and Google as well, right? And so we have companies like PCB maker in Korea called Isupetasis. So these are like the lesser known names that we've been hearing a lot. And we're not saying that these memory makers and foundries are not going to do well. Of course, the established names are always going to be here with us. We see precisely in the short interest in SK Hynix, for instance, the biggest HBM provider to NVIDIA is at the lowest right now. I mean, it's fallen from 3% to 0.6% from May. So we see that there's growing interest. Still, the interest is still there for TSMC, Samsung, and Hynix. But again, we see that broadening out.
We are seeing the broadening out. And where should investors be looking at for tangible industries, if you will, that are going to benefit from this rush of investment into the key names?
Yeah, so the analysts that I've been talking to say that Asia is where they're looking at right now because 90% of these equipment that goes into data centers or servers are all concentrated in Asia. So Taiwan, Korea, Thailand, and even mainland China, of course. So because of that, there's so much interest there, and we have seen that rotation from some of the bigger heavyweights that you have just mentioned, like SoftBank, for instance, has fallen close to 40% in November after Google came out with this updated Gemini 3. So we see a little bit of rotation from these bigger names to, again, those smaller equipment makers.
All right, Sangmi, that was great. That was our equities reporter, or Asia equities reporter, Sangmi Cha there. And some of the other tech stories that we're watching today, we were mentioning NVIDIA, of course, already, but US senators are seeking to ban NVIDIA from shipping advanced AI chips to China. They've introduced bipartisan legislation in a bid to codify existing US restrictions on exports of advanced semiconductors. The bill would effectively bar NVIDIA from selling its H200 chips to Chinese customers, as well as its more advanced Blackwell products. Meta shares gained as Bloomberg revealed Mark Zuckerberg is expected to make significant cuts to resources for building his company's so-called metaverse. Our sources say executives are considering budget cuts as high as 30% for units including Meta Horizon Works and Quest VR. The CEO had previously framed the project as the future of the company and the reason for changing its name from Facebook. Alphabet investors are increasingly confident the company's chips could become a major driver of revenue for Google's parent. D.A. Davidson says Alphabet could capture 20% of the AI market over the next few years if it gets serious about selling its tensor processing units, or TPUs, which is a type of ASIC chip, but that would make it a roughly $900 billion business. The success of TPU chips is a key reason for the stock's 30% rally in the fourth quarter, putting it amongst the best performers in the S&P 500 index.
All right, we'll leave you for this segment with a look at how Asian markets are doing as we go to break. Coming up after the break, David Booth, Dimensional Fund Advisors Chair and Founder, will be joining us. This is the China Show, and this is Bloomberg. And welcome back to the China Show. Well, legendary investor and Berkshire Hathaway CEO Warren Buffett is retiring at the end of this year. For many investors, it's the end of an era. Bloomberg Originals looks at how Buffett changed investing forever and what's next for the company he built. Here's a preview.
If investors had a Hall of Fame, Warren Buffett would occupy his own wing.
People from all over the planet look up to him, read his biography, hop on a plane to go see him talk.
He took a failing textile mill and turned it into a $1 trillion conglomerate. It has insurance companies, Dairy Queen, railroads, and energy businesses.
For decades, Buffett's investment savvy has led Berkshire Hathaway to beat benchmarks.
One of the biggest asset managers today, which is Vanguard, the entire philosophy is no one's really going to be able to beat the market, so you might as well not even try. Well, okay, no one besides Warren Buffett.
If you look at the total returns, Berkshire blows the S&P 500 away.
The legendary investor Warren Buffett.
So when the 95-year-old announced he would retire at the end of 2025,
Greg should become the chief executive officer of the company.
It marked the end of an era at Berkshire Hathaway.
Greg Abel led Berkshire's energy business for so many years. But it is tricky. Warren Buffett has not only been a very good investor, but he's also pretty charismatic.
He won't be writing the annual letter next February. This is a big change because Buffett fans have been poring over that letter over the years because it's full of witticisms, investment advice, pearls of wisdom. There's also the fact that he's not going to be taking Q&A at the annual meeting next May in Omaha.
Morning. Welcome to Berkshire Hathaway.
He was talking for 4 to 5 hours every year and taking questions from people that follow him all over the planet. That is going to be a big change because Buffett's personality is unmatched in the investment world.
And subscribers can watch the full documentary on the Terminal and Bloomberg.com. It will also be available on Bloomberg's YouTube channels at a later date. Well, our next guest founded Dimensional Fund Advisors in 1981, of course, another pillar in the investment community, growing it into a global investment manager with more than $900 billion in assets. It's also the world's largest issuer of actively managed ETFs. Joining us now here in Hong Kong is Dimensional Chairman David Booth. David, good to see you.
Well, great to see you. Great to be back in Hong Kong.
Great to have you back in Hong Kong. I understand you haven't been to this part of the world in 6 years, so pre-pandemic.
Yeah, right.
I hate to tell you, a lot has changed. What's your key takeaway from what you've seen?
Well, I tell you, I think the excitement is back in Hong Kong. You know, that's one thing. That's kind of the key takeaway, kind of informally. But, you know, things have changed a lot. And 6 years ago, it was kind of a rough spot for Hong Kong.
Sure, there was political uncertainty, and of course the pandemic really walloped the whole world. But a lot has changed on the technology side in China and the innovation. Is there a key takeaway for investors that you've gotten from what has happened across the border with the innovative trends?
Well, I think, you know, globally the trends are somewhat similar. I mean, increased technology has changed, you know, reducing costs, for example, dramatically. So to the point where investors, you know, get a much better deal today than when I started in business in 1971. You know, there's no reason for people to pay really high fees anymore.
For U.S. pension funds or endowments that are investing through you, do they have less of a preference now for China, though, than they did in years past now?
I think a lot of it's kind of political. Depends on the, you know, the state and their policies. I mean, there are some state legislators that have you know, mandated a no China you know, policy. So there's a bit of that. But we still invest in China. And,
so then, if funds then are needing to switch to EMX China, how does that impact you as a business?
And clients.
Yeah. Well, you know, it's the client's money. So if they want it ex-China, we do it ex-China. And if they want China by itself, we can do that as well. So,
how do you see the trends? You just mentioned it in an answer or two ago about lowering the fees and lowering the cost for the investor. And I understand more recently you were given approval by the SEC to essentially do what Vanguard has been doing as well, and that is essentially combining the ETF structure with mutual funds to allow access to these in a single fund.
Well, that's right. I mean, ETF business, as you know, globally has exploded. That's one of the reasons I'm here this week, is talking to people about our active ETFs. We're the largest active ETF manager, at least in the U.S. and maybe globally.
Yeah. Then on that point, I mean, because the ETF market in Asia is much smaller, of course, compared to the US. What's sort of the appetite for it here, and is there enough awareness of say, the preference for active versus passive?
Well, I mean, it's, we were, in some ways, we were late to the game. For years, our clients weren't all that interested in ETFs. And then all of a sudden, they were very interested. I imagine the same thing will happen here. There's quite a bit of discussion about ETFs, and I imagine it'll be an increasingly hot topic going forward.
Wealth management also is a key topic here. Obviously, as Hong Kong looking to get the family office money versus Singapore, but also, again, you're seeing the mainland family money wants to come to offshore places like Hong Kong to have more of a global exposure for their portfolios. What are you seeing in the trends for wealth management?
Well, I mean, for one thing, over the last 50 years, there's been a huge increase in wealth. So, and once again, a lot of the trends will be are global trends. The move away from commission-based services to fee-based services, I think, that's been the big change in the U.S. over the last 30 years, and I think it's maybe starting a bit here, slowly. But like all of these trends, new ideas don't usually blossom into huge, huge outcomes right away. It's usually good ideas start slowly and then compound, and you wake up one day and it's huge. And I think that will be this move towards fee only in the wealth management space. But it increased a big interest obviously in retirement income. That's and every year there are more tools being developed to help people think through their asset allocation decision for retirement income. Pretty exciting.
How do you think about those tools? Because there has been as well a shift to, say, robo-advisors or AI-led technologies. How do you look at integrating those into your offering?
Well, AI, of course, is going to be huge in every big part of everybody's business. At the end of the day, though, people don't really trust algorithms. I mean, anybody that's used AI realizes sometimes it comes back with a real goofy answer. So there's always going to be plenty of room for trusted advice. I mean,
trust but verify is what Ronald Reagan used to say, right?
Yeah, that trust and but verify. Yeah,
trust but verify. Yeah. So, do you trust and have to verify the market's boom that we've seen? We've seen a little bit of a pullback because of it. I'm talking about in the United States because of the AI boom. Some would say it is a bubble. Is it a bubble? Does the data? Because I know you look really at the facts rather than the rhetoric. Is it in a bubble, first off?
Well, bubbles, I think, are things that usually are measured after the fact. I mean,
after it pops.
After it pops. Then you go, that was a bubble. Well, why didn't you tell me before the fact? I mean, that's... all we know is AI is going to be huge. AI is going to... and the leaders in the field right now are investing hundreds of billions of dollars. It's just not a few billions. Building out this infrastructure. And my take on it is there'll be big winners and big losers in all of that.
But are you seeing indications, like with the Russell 200 was up, I think at a record high, so a broadening of this rally?
I would think so. I mean, it's people are. It's really kind of funny. On the one hand, they're optimistic about this AI boom and so forth, and then at the same time they go, well, I would expect a higher return. I mean, I don't. At some point, risk and return have to be related a bit more. I don't know how all that will shake out, but over the last 10 years, of course, the Magnificent Seven has kind of dominated everything. But the rest of the market, it seems to be picking up, recently. So maybe it's broadening out, but clearly, the Magnificent Seven can't keep growing at the current rate they are without being having to go to some other galaxy.
Well, I guess I'm trying to ask, what's your risk appetite like right now?
Mm-hmm. But I have we're pretty much constant risk appetite. I mean, it's the volatility of the market changes quite a bit, but it's in those periods of time when there's a big drop, for example, and people start getting stressed out, you wonder maybe that's the time when the expected return's the highest. So we're kind of in the normal range.
David, thanks so much for joining us this morning. That was David Booth there, founder and chairman of Dimensional Fund Advisors. And if you are a subscriber and you want to rewatch that interview, you can via our interactive TV function. That's TV Go. So do check it out. We'll have much more ahead. This is Bloomberg. Taking a look at market action this morning because we are nearly 25 minutes into the session, but we're seeing some big moves here. So you've got Cunabox here that's just signed a partnership to develop an AI platform. That stock is up around 5%. But also taking a look at some of the listings we have today, because one of those is Tianyu Semi. You're seeing that stock actually under pressure, down more than 20%, but its initial offering was around 60 times subscribed or oversubscribed. So it's still a strong, relatively strong interest in it, but also shifting to more threads, of course, because this is the big debut that we're watching in Shanghai today. So that's the star board or star market that it's just listed on, but this is essentially what wants to become the next NVIDIA, and they are a company that's focused on fully functional GPUs. They are one of the rising stars in China's semiconductor ecosystem.
And you're excited about this?
I'm very excited about it.
Run by a former NVIDIA engineer.
Exactly, yeah. Zhong, but he worked for NVIDIA from 2006 to 2020.
All right, well, still to come, we would talk China credit strategy with Triada Capital and why they don't see a path to recovery for China Vanke bondholders. Plus, Goldman Sachs tells us why global investors are staying positive on Chinese stocks despite low expectations for large-scale stimulus. We'll have a lot more coming up. You're watching The China Show. You're watching essentially the Orient Pearl Tower there.
Welcome back to the China Show. Taking a look at the CSI 300. We're half an hour into the session this morning, and also what's happening across broader markets, because actually Asian equities are under pressure in the session today. We did see quite a lackluster trading session on Wall Street overnight. We are waiting, of course, for some key inflation data, plus we're going to get the September figures as well. So it's going to give more of a direction on the outlook for the economy. So ahead of that, actually, when you take a look at trading volumes this morning, they are very thin. They're pretty far off their 20-day moving averages. What else we're watching is certainly that drop for the Nikkei. It's the most pronounced, down 1.5%. So that is the big drag so far for us.
Yeah, that's right. And we'll just be looking at signals from policymakers in Japan as well, as they still haven't been able to get any kind of appreciation in that yuan. Maybe that's what they want at the yen at 155.
Yeah, that's right. And of course, the BOJ decision coming up later this month. But let's take a look as well, because if there's really one big story we're tracking in terms of the equity picture in China today, that is more threads, because it's made its trading debut this morning on the star market, selling at 70 million shares. They were actually priced at around 114 yuan a piece. So it's been a significant rally for this. It really does make you question, was the pricing accurate initially? But anyway, it is a Beijing-based company founded in 2020 by a man, Chairman Zhang, for the business. He was with NVIDIA from 2006 to 2020.
Right, and this is a starboard listing, so this is going to be a little bit more volatile. It's going to have a lot more retail investors as well, and there's a lot of momentum in the AI theme in China, no doubt, as well.
Yeah, and I think it's interesting when you talk about that interest from retail subscribers. I mean, it was oversubscribed by 2,700 times, so it does really tell you it's the most oversubscribed listing we've seen for China going back to 2022, but actually one of the biggest debuts this year for onshore markets, because it raised $1.1 billion, and the proceeds from this, more threads really wants to put into essentially trying to follow that NVIDIA trail.
Yeah, absolutely, and it really fits into the narrative of, if NVIDIA is not going to be able to sell its most advanced chips here, who's going to be the winners in this part of the world with its own agenda in AI? There is this bipartisan legislation that was unveiled on Thursday in the U.S. It would bar NVIDIA from shipping advanced AI chips to China in a bid to codify basically existing U.S. restrictions on chip exports. That's the Secure and Feasible Exports Act, called safe. So we can talk about that with our next guest, Belle.
Yeah, let's bring in Gao Yuan. He's our tech reporter joining us. And Gao, I mean, there's two stories we can speak with you out today. There's more threads, and then you also had a great scoop on CambraCon as well. But let's start with more threads, because it is, of course, a very anticipated listing, and you're seeing that excitement being very much reflected so far in its pricing today.
Indeed, Annabelle, good morning. The excitement is really through the roof. This company is one of China's most hopeful GPU designer. They does not make chips per se. They basically design GPUs, a similar job that as NVIDIA is doing. But if you ask me how many chips they can sell next year, I have to say it's not gonna be big. Not just comparing to NVIDIA, but also comparing to their local competitors like CambraCon and Huawei. I know we're gonna talk about CambraCon later. But for more thread, the IPO is the first step. They have the money to fund their research and development. In the longer term, I think they will be one of the contenders to help China to grow their own AI chip, products that will help the country to have more technology independence in the race against the U.S.
Yeah, could you share maybe some details about the architecture that more threads follows as well? Because it is different to CambraCon. It's more aligned with perhaps the approach from NVIDIA. But what does that actually look like? And what are the big bottlenecks for the company as well, do you think?
That's correct. So they're basically doing GPUs. It's like you said, it's exactly the same technology that NVIDIA is using. So basically, it's a graphic card per se, and they're using it to power AI as an AI accelerator card. The bottlenecks for Chinese chip designers is that they cannot use TSMC as a contract maker because basically they are strained to local contract makers like SMIC, which is based in Shanghai, and Hua Hong, also based in Shanghai. They have several plants. But for the advanced node, which means sub 7 nanometers, the capacity is limited, I have to say, comparing to their overseas competitors, Intel and TSMC. So that's a concern. But for more threads for the next year, I don't think that will trouble them too much because the scale of their product is not as big as their competitors.
Gal, give me the significance of CambraCon's capacity jump. Tripling is the estimate that we're seeing right now into next year, for next year. And again, where is China with its advancements in its AI accelerators compared to NVIDIA? Is it on par with what, H20? That's why H20 is essentially not really invited to come participate in the China market?
Yeah, we just had a story yesterday about CambraCon, which is yet another, I have to say, AI chip maker in China. But different with the difference between CambraCon and Moorthread is that CambraCon is actually a more realistic rival against NVIDIA. We all know NVIDIA is having a lot of trouble in China. They cannot sell their AI cards in this country legally. But for CambraCon, it's opportunity, right? Basically, they are trying to fill the void left by NVIDIA. But there is also still competition. So basically, CambraCon, Huawei, and Haigon, there are quite a few competitors in this country trying to fill this void left by NVIDIA. But CambraCon is emerging as one of the top contenders in this race in China. We just reported that they are having a pretty optimistic target for next year's chip shipment. The capacity is growing. Their suppliers are having a bigger scope of the shipments. So basically, it's a good thing for them. Looking longer, I think the race between CambraCon and Huawei is definitely going to go more intense because if you look at Chinese hyperscalers, Tencent, Baidu, Alibaba, and ByteDance, ByteDance basically is the Capricorn's biggest client. And now from next year, Capricorn is closing in to get more clients like Alibaba. So it will grow basically. For Huawei, the race is on.
You know, you've done some really great reporting this year, Gao, across the ecosystem and in the developers in particular, the competition amongst them, because it's so fascinating when you look at the production targets for Capricorn that you reported on. You stack that up against Huawei. You had another scoop on that earlier this year, but again, looking to double their output of AI chips. You've got more Threads again that wants to scale up. So you've got that capacity constraint you've already mentioned for the foundry side, because SMIC and Huahong can only produce so much, and only one of those can actually do the more advanced nodes. But what does it look like in terms of the demand as well? Because you mentioned ByteDance being a big buyer into 2026. Is this the year that China actually looks to try and get more global exposure and more global buyers for its products, or you think it's going to be totally swallowed up by mainland Chinese demand?
I think for those hyperscalers, they have several approaches. For domestic data centers, they have to use, well, the made in China chips, because that's the mandate basically for them at this point, because they cannot. For the most advanced, Trump doesn't. Well, we can discuss if Trump is willing to allow NVIDIA to sell some of the most advanced chips to China, but for now it's a no deal. For less advanced, China really wants to grow its own domestic brand, so there's no chance for NVIDIA there. But for those hyperscalers, Annabelle, I think they are still trying to build overseas data centers where they can have some NVIDIA chips running and helping with their training. The performance of locally made chips, Chinese chips, are actually not as good as NVIDIA's best training cards. So most of the Chinese cards are used to do inference jobs rather than training. So for training, they have to find some other smart ways to do that.
All right, Bloomberg tech reporter Gao Yuan, great having you on this morning on Friday on the China show. Still ahead, how developer China Vanke's offshore creditors, they're facing an average recovery rate of just 18% if they pursue a liquidation. A closer look at their limited options coming up next. This is Bloomberg. And welcome back. You're watching the China show. Some property news out of China this morning. Country Garden has named President Mo Bin co-chair after winning court approval for its offshore debt overhaul. Meanwhile, New World's bond swap plan is set to trim about $1.2 billion from the company's debt pile, but the distressed Hong Kong developer is still facing liquidity strains with one of the heaviest debt burdens in the city. Belle?
Yeah, and China Vanke seeking a one-year repayment delay on a $2 billion note, forcing investors to reassess their positions. Let's get more with our opinion columnist, Shuli Ren. We think China Vanke is an oddity with really no end game in sight, but I think you've been looking at different liquidation scenarios and exactly how much can be recovered from this, but it seems fairly dismal or bleak, the outlook.
That's right. Vanke's dollar bond investors can expect at most 20% of recovery rate, with the possibility of recovering only 10 to 15% of their original investment. And the reason is that this kind of dollar bonds, they don't have much protection, to be fair. Like this dollar bond, the $2 bonds worth $1.3 billion US. They're not issued by the parent company, China Vanke, but by Vanke's Hong Kong incorporated subsidiary, and it essentially is basically a shell company. So US dollar investors, the best they can do is claw out assets that belong to their subsidiary, and unfortunately, the really viable main asset is the 21% stake in warehouse operator GLP Holdings. And that at face value is worth about $2 billion. But that stake was also pledged away for $1.2 billion loan. So on the asset side, we're looking at less than $1 billion worth. But on the liability side, offshore, unsecured credit, they're over $5 billion. So you do the math. At most, we're looking at 17%.
And it's shaping up to be a pretty ugly fight between creditors, right? And we've already seen some investors essentially, at least 3 of them are going to be balking at the delay in the debt repayment plan, right? So is this going to, how ugly is this going to turn? Creditor to creditor violence, if you will.
Yes, it will be quite violent because like we know the average recovery ratio will be like about 18-20%, right? So for every dollar of asset, there will be $5 of creditors. And the bigger creditors, for instance, the big 3 or 4 mega Chinese banks that have given out Hong Kong dollar loans to Wanke, they are going to have first land grab, right? Because look, China Vanke does a lot of business with them onshore. They can say, if you don't give me all the assets, I'm going to cut off your loans onshore. So I really think U.S. dollar bond holders, they're looking at like 10-15% at most. And the price is reflecting that. Like Vanke's dollar bonds are trading at 20 cents on the dollar.
That's an ugly haircut, isn't it?
Yeah.
So how does Shenzhen Metro, which is the biggest shareholder, play into the situation as well?
So it's Shenzhen Metro at the beginning of the year offered some kind of informal bailout by giving out about 20 billion yuan of unsecured shareholder loan. But they had a change of heart lately. And you can blame them because Wanke is an ever-expanding black hole. Its contracted sales is expected to fall more than 40% this year, right? And the Shenzhen Metro, any SOE, they don't want to throw good money after bad. So they are basically stepping back and saying, okay, I only have 27% stake. I'm not a majority shareholder. You are on your own.
All right, Shuli, thanks for joining us this morning. Really great analysis. That was our Bloomberg opinion columnist, Shuli Ren there, talking about China Vanke amongst those developers, but seeking a 1-year delay to repayments of its 2 billion yuan note. I earlier said dollar, but I definitely mean 2 billion yuan note. But let's get more on that outlook for the China property space and bring in Monica Hsiao. She's founder and CIO of Triada Capital, joining us. So thanks very much for coming into the studio. And I think we can start exactly there with what we're seeing with China Vanke, just concerns generally around the China property space. How are you looking at the risks and how acute do they look for you right now?
We have been, for the last couple of years, really staying away from that space overall, other than a few tactical trades. I would say that, Shuli's basically right. I would add to the difficulty of the analysis the fact that all the high-yield property developers have, to some extent, off-balance sheet that may or may not have been cleaned up along the way. Right. So that's another big question mark into the calculation of recovery. I think the interesting thing here is that we all knew that Vanke was not consolidated into Shenzhen Metro. So to that extent, it really wasn't a proper SOE. And I think this is also the reason why this kind of chaotic sort of mess that's unfolding right now hasn't really impacted the SOE credit space because I think people still think that there is a line between sort of proper SOEs and the quasi.
Is there a line there? Because, again, the question is about the systemic shocks that these individual property developers, which are part of a bigger problem, obviously, that has not been resolved. Evergrande basically was liquidated. And then you have also, of course, Country Garden also at least getting approval for their debt restructuring plan. But that at one time was the biggest residential property developer in China. What is going to be the systemic shock to the big parents and the SOEs and the banks?
Yeah, to be fair, I think it's been well telegraphed for a while now that privately owned enterprises are really on their own. I think Vanke was given a lifeline for a while to sort of allow them to see what happens with sales, see if there's some rebound. And yeah, I think that the government wanted to hold a sentiment, prop it up for as long as they could. The reality is that, to your point, I think there's some increased risk. I don't think that we're in this zone where China cannot manage this on nationwide level. Not yet, but I would say that banks, what happened with Vanke here, I think is demonstrating that the banks, are more concerned about asset deterioration, so they don't want to keep on extending credit. Even after all the extensions or the restructuring and some of the write-downs, there's still a decent percentage of bank loans today that are in property space. It's estimated to be around 5%. Probably reality is more. The regional banks probably have even more than that. And then, you have around that percentage in the actual asset base valuation. So the deterioration of this will continue for now. We're looking at this year on year, another sort of down 20% of sales, across the top 100 developers. And that, actually, to put it into perspective, is, around 70% below the average of the last 4 years of property sales in China. So, this is quite dramatic. And, we only, in the bond space, only had a few last men standing. I think that at some points of this year, people had hopes that Vanke would be one of them. But it does look like, it's facing the choice of either hard default or a messy restructuring.
Yeah, so on that, if it is sort of that option A, this default, what's sort of the recovery rate that you can expect?
So as we know in this market, you don't need to have a hard default for it to trade like a defaulted bond. Yeah, so exactly. That's the reality. That's right. Yeah. So I would agree with Shuli that, I think you're going to look at this ending up probably, at best sort of 10, 12 cents. We've seen plenty of these trade, in single digits. I mean, look at where Evergrande is. So it's pretty hard to tell. And I would say that the chance of a hard default is probably lower than a sort of generalized restructuring. But, it's really remains to be seen also how they treat offshore versus onshore, the secured versus the unsecured. All of that comes into play also with a certain amount of politics.
What is your overall deflationary outlook for China? I mean, that's going to be the theme again in 2026, and it depends on how much policy weaponry, if you will, they can throw at ending this vicious cycle down. They've tried anti-involution campaigns in various sectors, but it doesn't seem like there's been a big bazooka to kind of limit the spiral downward for property.
Yeah, you use the word can. They can do many things. I think they choose not to for various reasons. Yeah. But, the interesting thing is if on the off chance that there is a hard default on Vanke and it starts to spill over where, the already anemic sales get even much worse because sentiment, spreads and also, banks continue to then constrain liquidity and credit, in that space, maybe that will push the government to bring out the big bazooka. But we don't see that right now. So I think that the government will continue to do what they have done, which is continue to focus on particular sectors that they care about as more strategic. And, basically hope that what they really need to do is to push up general demand because, the savings rate continues to increase.
I want to get your views as well, just on the next big event that we have, and this is the Fed. So shifting now away from China, but the Fed, and they're going to cut probably next week, so we don't need to worry about that one too much. But going into 2026, what's your expectations around easing? But also, what's your expectation around Fed chair appointment? Kevin Hassett is in the lead, but then, well, at least according to betting odds and what Trump has sort of hinted at, but do you see any sort of jitters from that, given he is seen as quite pro-Trump as well?
So there's a lot to unpack there. I mean, first of all, in terms of the market's view, the probability is 90% that we have a cut. But, there is still that non-negligible 10%. And I think this speaks to the fact that we all know the committee was pretty divided. Yeah. And if you go just by data and the economic environment and the macro liquidity that's present today, there's a pretty good case for why you should not cut yet. And I think the Fed is faced between either a hawkish hike or a dovish pause. I do think that most likely they will cut, but the reality is that there are some inflation pressures. We've firmly shifted away from trying to meet inflation targets to worrying about the labor markets. But even with the soft data that's come out this week, there is, the ADP, but then versus unemployment claims not being so bad. The economy isn't that bad shape, to be honest.
Monica Hsiao, founder and CIO of Triada Capital, thanks so much for your time and coming in on this Friday morning. We have more on the show coming up after the break. This, of course, is the China Show, and this is Bloomberg.
Quick check on how markets are faring this morning. We are about an hour into the session and you are seeing some broad downside here. So property stocks looking to be a big drag on mainland equities as we head into this Friday session. It's 11:29 a.m. this morning in Tokyo. I'll start that one again. But we do have Japanese equities just about to go into their lunch break, and that's actually the Nikkei that's dragging down the broader benchmark today in Asia. It was a very strong Thursday session for them. Some of the things we're watching in particular, we just had some data coming out for spending, essentially, consumer spending in the last couple of hours, but we actually saw households reducing their spending for the first time in 6 months. So decreases in transport, decreases in housing, but actually economists were looking for a gain for that. So it does it's an interesting data point, I guess, as we look ahead to the BOJ meeting this month and perhaps officials looking at raising borrowing costs as well.
Yeah, we were going to check SoftBank shares as well, seeing it's up this morning. Masayoshi Son, of course, the CEO, working on a plan to build Trump-branded industrial parks around the U.S. using funds pegged by the Japanese government as part of a recent trade deal. This, according to the Wall Street Journal. So we're seeing SoftBank up about 4%. Japanese lender Aozora Bank has carved out a niche by financing leveraged buyouts at a time when Japan is seeing a surge in deal-making. M&A in dollar terms is set to reach the second highest level on record this year. CEO Hideto Umi told us he expects more opportunities as Japanese firms address governance reform.
I believe the trend will continue. For over 30 years, amid Japan's economic stagnation, the government and the Bank of Japan have implemented various measures to revitalise the economy, including the Corporate Governance Code and Tokyo Stock Exchange reform. These are finally starting to show results and gain momentum. The trend won't stop. I believe it will continue next year too.
You touched upon corporate governance reform, but I'd like to delve a bit deeper into next year's outlook. What kind of M&As do you think will increase? The number of MBOs is also rising.
There are almost no top managers who are not paying attention to capital efficiency. Everyone is seriously discussing what their company should be, both in management or within the boards. This could mean an M&A, going private, or other approaches. So I believe we'll see a broad range of these options emerge this year, with some existing ones expanding further.
Moving on to LBO acquisition financing, your bank's loan balance increased significantly in the previous earnings report. The balance is increasing. I believe many banks are doing this. But do you perceive any challenges or issues in the market?
LBO loans have existed for some time, but since the capital cost reforms began, the number of deals has increased. There's also a slight trend towards larger deals. In that sense, it's a question whether the banks currently offering this financing can respond to the demand. It's not just us. We need to support and encourage the improvement of Japan's capital markets, but also broadening the base a bit more.
I'd like you to elaborate a bit more on this part about broadening the base. The issues are quite limited, and there's also the secondary market discussion. How do you think we should ideally broaden the base?
Both, actually. We must broaden participation even as we issue, and we also need participants entering through syndication and secondary markets. Until now, it was often the case that a limited number of banks acted as primary underwriters. But to broaden this, I believe it's crucial to establish a system that allows those who haven't focused much on this area yet, but are looking to get involved, to participate effectively.
When it comes to LBO, Aozora Bank has been quite a pioneer in Japan since the early days of this market. Could you tell us a bit about how you plan to approach this current booming market?
January 4th next year marks exactly 25 years since we became Aozora Bank. This LBO loan business, along with structured finance in general, was a field we worked in from the start. During this time, we've handled numerous deals, many successes and failures. Myself and a lot of employees have extensive experience. I believe it's necessary for us to vigorously drive the growth of this market while also maintaining a certain level of discipline to foster a healthy market.
You mentioned a disciplined, healthy market. Regional banks are increasingly participating in this field. What can Aozora do in relation to these regional banks?
We've already worked with several banks. They come to our bank as trainees. It's a case of learning by doing. They participate as members of the deal team, handling the actual case. After that, they return to their local bank, and when we do a syndication, we can communicate using the same language and mindset. Also, when similar LBO-type projects arise locally, we participate and work together. I believe that developing this kind of relationship will contribute to the growth of the market.
That was the Aozora Bank CEO there speaking with Bloomberg's Hideki Suzuki and taking a look at China benchmarks because we're an hour into the session and it's not looking that great to end the week, actually. We're seeing some broad downside here, not substantive losses, but still we do see trading volumes as well looking fairly thin across the Asian region. Some of the standouts, and we've been speaking about it all morning, but is more threads, of course, and this is essentially this is a company that wants to become the NVIDIA in China. We hear that kind of frequently. There's a few NVIDIAs or would-be NVIDIAs.
Well, it's run by a former...
It is, exactly. Mr. Zhang, or Chairman Zhang, is a former NVIDIA employee, worked for that business from 2006 to 2020. But as well, this company is following the approach of NVIDIA by developing fully functional GPUs, and that sets it apart from a player like Cambricon, for instance, that's working on ASIC chips that have more specialized functionality. But that's more threads. Again, very strong trading debut for that company. Property sector, though, is the big drag on the benchmark today, and it's an interesting one because even though investors, and this is taking a look at what's on our MLive blog, but Mark Cranfield is making the point that investors might have written off property stocks as a headwind, but they're still coming back to hurt the broader market because you take a look, for instance, at the Shanghai real estate sub-index, and it's down around 11% from its September peak, and losses are accelerating in the quarter. Yeah,
it's been an avalanche of different news about bond restructurings and whether there's going to be creditor revolts at Vanke. Country Garden obviously going through some painful times, and then New World obviously had that news earlier this week where essentially did not reach that threshold for their restructuring plan.
Yeah, I think a 72% approval rate, which actually some were saying it's still kind of a win for the business, but obviously headwinds facing New World as well. But let's get more perspective on where we go in the real estate market. Bring in Hui Shan. She's Chief China Economist at Goldman Sachs, joining us this morning. So thanks for coming into the studio. Thanks. And I think, as we said, we can start in that property space and sort of the overhang. It's really the perennial problem in mainland China.
Yeah, that's correct. When you talk to clients, it feels like we have been talking about this for the past 5 years, and yet it's still a very important part of the economy. If you look at the data past couple months, you do see accelerated decline in activity, in prices. So it's indeed very concerning. I was in Beijing, Shanghai, talking to clients, and some of the clients, if their own property prices are falling, that influence their sentiment and to some degree affect their view on the market, on the broader economy.
So how much is that then tied? Have you been finding both from the authorities you talk to and also anecdotally from the people as far as boosting consumption is a key push. It's going to be. The Central Economic Work Conference is going to be meeting, I believe, next week in the run-up to the National People's Congress, where we're expecting to get policies that will boost consumption. But how much do you see, as an economist at Goldman, essentially seeing that the value of their homes is directly tied to the ability and the desire to spend?
It is a important channel. If you think about average households, what is your biggest asset? It is the real estate. So the price decline certainly, no doubt, will have a negative impact on consumption. That said, we are of the view that in the first few years of the housing downturn, we talk about housing's contribution or drag to GDP growth or broader economy. And now it feels the broader economy is pulling down property as well. In the sense, if you don't have jobs and income, you don't consume, and the overall economy is slowing, and that put further pressure on people's buying capability, and therefore you see prices falling.
What happens, though, in terms of the response? You've got the fiscal side, the monetary side, but there's been commentary, for instance, from the PBOC governor writing in the People's Daily newsletter, or newspaper rather, but saying that they should be avoiding China excessive policy adjustments. So it tells you maybe they're not looking to make any sort of changes in the near term?
So if you look at the recent PBOC communication, there is somewhat a still accommodative but less dovish tone in their communication. I think if you look at, FX is no longer a constraint for PBOC to cut rate, but perhaps the bank interest margin is a constraint for PBOC to further reduce interest rate. And some of the policymakers perhaps also have the view that cutting 10 basis points, 20 basis points, that's not really getting at the core of the problem. If you look at it historically, we did analysis looking at all these housing busts around the globe. It takes a really long time to get to the bottom. On average, it takes 6 years. So by that metric, we're still not at the bottom yet.
How much do you think authorities will allow the renminbi to appreciate? That would also give a little bit more spending power in the pockets of households.
I think that channel might not be the most important on policymakers' mind, just because if you look at how much the Chinese consumers buying foreign products, not that much. So I think in terms of managing the currency, there are a couple of considerations. One is managing the flows. You want to make sure the currency appreciation, both direction and pace, is not causing massive inflows and outflows and market volatility. Then secondly, I think the whole RMB internationalization, especially in this geopolitical environment, is carrying political and economic significance. And if you want others to use your currency, you need a stable and perhaps mildly appreciating currency.
Okay, then in terms of the policy steps that you do see eventuating then, because we're coming into the Politburo meeting, we're coming into the Central Economic Work Conference as well, where do you see them really trying to hone in on then for next year?
In our expectation, as I said, it is the broader macroeconomy, the labor market, the income growth that is impacting the property sector. So I think a macro policy perhaps need to get back to the basics, the monetary policy, the fiscal policy, the credit policy, and the housing measures collectively really drive the broader economy and income growth to move higher. And that will solve a lot of problems, including poverty, local government debt issue. I think right now, targeting the bigger picture perhaps is more important than targeting a specific problem area.
I see in your tour of economists going to Beijing and Shenzhen, also offshore, you said just about every potential investor asked about AI. How should the investor for China AI? We've been covering more threads today, CamberCon, all these different companies, including there's a new debutante today in the AI space here in Hong Kong. How can you look at the AI space from a different lens than how you look at AI in the United States, which has powered, obviously, the S&P to still near those record highs?
In our client conversations, people worry about AI's implication for job market. That's not just for China or U.S., it's globally. Eventually, how do we manage technology innovation and potentially a lack of job opportunities. But I noticed something interesting in the onshore discussions. Investors are more concerned about AI bubble in the U.S. And if that correction happens, that would have implications for Chinese equity market. But offshore, the questions are not really that much about the AI bubble outside of China, but more about is there any bottleneck in the China AI sort of push, and is semiconductors a real constraint, and how China's AI push will be different than the U.S. I think reading government policy is pretty clear. Even in the consumption document creating 3 trillion RMB of consumption areas, there is a heavy discussion about marrying AI with the supply of goods and services.
Then on that, if people are concerned around the US AI bubble and the potential that also pops, does it also become an issue is there a link to exports in China as well? Because if you've got a lot of people's wealth that's being tied up in that wealth generation from the AI bubble, and then you have that pullback in spending, I mean, is there any sort of read across risk that you look at for next year?
Certainly. I mean, when people ask us, our view is that Chinese exports will remain strong in the coming years. At the end of October, we raised our forecast for the next few years. And that was the largest GDP revision in a decade. And, when people ask what are the risks to your view, externally, that is whether it's AI-driven or some other event-driven, if your trading partners are in recession or in economic slowdown, that won't be very conducive to this export-driven growth model.
All right. Hui Shan, thanks so much for joining us. That's Chief China Economist at Goldman Sachs joining us this Friday morning. All right. Just before we go to the break, we are getting headlines across the terminal about Xiaohongshu, Red Note, as it's known outside of China. Taiwan is banning that Chinese app, Xiaohongshu, due to fraud concerns. Obviously, Red Note, a controversial one, at least in the United States, again, on the tech front from China. A Red Note, Taiwan saying is banning that app, highlighting the democracy worries related to social media apps from across the strait. There were about 1,700 fraud cases involving some $7.9 million since last year, according to the Interior Ministry in Taipei. So we'll have to watch this and see. This ban will last, I think, at least 30 days, did I see, Annabelle? Yes, something like that. Anyway, we're going to be following this story as it develops. We'll be right back. This is Bloomberg. And welcome back to the China Show. Again, we're just recapping the headline that crossed a few minutes ago, and I need to make a little bit of a correction. It's live television, folks. I said 30-day ban is actually for 1 year, citing those fraud worries on Xiaohongshu, Red Note, as it is known outside of China.
Yeah, and I think the concern for officials in Taiwan is that if you have any sort of fraud or scam activity, there's really little recourse.
There's no recourse.
If the app isn't based there. So anyway, that's the details on that one. But let's shift course, because I think it's interesting. You see that pushback from the PBOC on that yuan appreciation, where you're also seeing some moves from central banks to also try and limit the moves in the currency, as well as what's happening with the RBI, because yesterday in the session we actually saw the rupee raising losses and gaining for the first day in 7, and that's after the central bank stepped up dollar sales to try and support the currency. Of course, the rupee has been moving in absolutely the opposite direction, really.
That's right. Bloomberg Economics thinks the RBI is set to restart rate cuts later today due to record low inflation and pressure on the rupee. For more, Bloomberg's FX rates reporter Malavika Markol joins us from Mumbai. So what is expected?
Yep. Hi, good morning. Traders, economists, everybody, most of them are looking for a rate cut today. The outlook is clouded by a plunging rupee, however, so they are also going to be watching for any rupee comments from the RBI governor when he delivers his speech later today, and they're also going to be watching for any announcements on bond purchases to replenish some of that liquidity that is drained when the RBI intervenes to support the FX.
What's the sort of tone that you're expecting the governor to strike as well later?
Yeah, I mean, he has earlier pointed out that there is space to cut rates, especially given the fact that inflation is so low in India right now. But the spanner in the works here is the fact that GDP has been really resilient, despite the fact that we've seen one of the harshest tariff rates in Asia from the US, which is at 50% on Indian exports, and the fact that we've seen the rupee depreciate past a key psychological level of 90 per dollar this week. So we are expecting him to strike up a really fine balance between managing expectations of a rate cut while also managing FX depreciation.
How does it look, though? You mentioned that currency, and of course it was the big move this week, the rupee going, as you said, below that 90 level, a key psychological level. How does the rate decision later today also have a bearing on the currency against the greenback as well, ahead of the Fed decision next week?
Yeah, that's a good question. When central banks cut rates, it usually negatively affects the currency. So it is also to be seen if currency considerations will play into today's rate decision, because we already saw that 90 break. We saw some gains in the rupee yesterday, with the RBI stepping in to defend the rupee more forcefully. But it is to be seen if today, that rupee consideration will come into play when they sit down to deliver the rate decision.
Malavika, great to have you with us. That was our Bloomberg FX and rates reporter, Malavika Kaur-Markol, joining us as we have that RBI decision coming up, and really that expectation we're going to see a restart on cuts. But monetary policy and the outlook for India's central bank is very much going to be the focus of Insight later this hour. We've got, or next hour, we've got two great guests who are coming up. Time's on your screen.
And for more coverage on key stories in the region, catch the latest episode of Wall Street Week, which takes a deep dive into the unrest in Nepal. Bloomberg traveled to Kathmandu to find out the stories behind the protests and what they mean for the rest of the world. Don't miss that on Friday, 6 p.m. if you're watching in New York, 7 a.m. Saturday morning here in Hong Kong. We'll be right back on The China Show. This is Bloomberg. And welcome back to The China Show. Some corporate news this morning. Temasek-controlled Fullerton Fund Management is said to be winding down its China business, including an 8-year-old hedge fund unit. Sources say Singapore-based Fullerton has shut most operations at the Shanghai hedge fund and another private fund business and cut most of its onshore staff. But the firm has told Bloomberg it plans to maintain a presence in China. U.S. senators are seeking a ban on NVIDIA from shipping advanced artificial intelligence chips to China. They've introduced a bipartisan legislation in a bid to codify existing U.S. restrictions on exports of advanced semiconductors. The bill would effectively bar NVIDIA from selling its H200 AI chips to China customers, as well as its more advanced Blackwell products. And Meta shares gained as Bloomberg revealed Mark Zuckerberg is expected to make significant cuts to resources for building his company's so-called metaverse. Our sources say that executives are considering budget cuts as high as 30% for units including Meta Horizon Worlds and Quest VR. The CEO had previously framed the project as the future of the company and the reason actually for changing its name to Meta from Facebook.
All right, still in the tech space this morning, because I think if there's been a really big theme we're watching, it is what you can see here coming up. But you've got copper, actually, we'll get to tech in a moment, but copper is certainly surging. You're above that 11,000 level. It's actually a really interesting call we've got from Goldman Sachs, and they're saying that this surge you've seen, it's actually going to prove short-lived according to their estimates, and that's because there's more than enough metal to meet global demand. But you are seeing a lot more people turning more bullish on the outlook for that commodity into 2026. As we said, the tech story today, and the one that we've been very much tracking through the session, is this listing for more Threads, because this is a company that wants to be the next NVIDIA in mainland China. What also makes it different is that this is the company that's following NVIDIA's approach with fully functioning GPUs, and also the chairman, Chairman Zhang, is a former NVIDIA spokesperson, or employee rather, instead.
Yeah, so connect the dots, and that's what investors are doing, right? All right, that's it for the China Show. Insight with Haslinda Amin is next.